Commodity Wrap. I'm Tony St. James. Well, it's a holiday-shortened week. Thursday, no trade. That's an observance of Juneteenth. And Juneteenth is actually, it wasn't a federal holiday before 2021. Really wasn't a state holiday in Texas, just a day that was somewhat of a celebration, maybe a remembrance, because it was the date back many years ago when they found out that slavery had ended. And it finally made its way all the way to Galveston back then. And so that's how it became a bit of a celebration in the state of Texas. And then it spilled over and has become a federal holiday. So with that, everything shuts down, including government offices and the markets. So with that in mind, how did we settle in front of that Juneteenth holiday? Corn higher, soybeans lower, meal lower, soy oil lower. A big rally in the wheat market, all three exchanges higher. Cotton market in the red. Here to help us break it down, Brian Hoops, President, Midwest Market Solutions. All right, Brian, let's start. You can start anywhere you want. It's just that not very often do I get to say corn following wheat higher.
Not too often, do you? But, yeah, definitely wheat's the upside leader this entire week. We've had a lot of short covering. Funds, of course, are holding big short positions in the wheat. And, sometimes it just takes a little spark to kind of ignite what they're wanting to do. And they have covered a lot of shorts here in this marketplace. So it's spilled over to the corn in the new crop category to an extent. It doesn't appear that anyone's really interested in buying the July corn contract ahead of deliveries. And we're seeing, nice move in corn and wheat in particular. I think it's a combination of things. You look at our harvest progress nationwide, we're only 10% done with the winter wheat harvest, but Kansas is only 3% complete. Normally they should be about 16% done. So that's really fueling this with this wheat rally, the fact that wheat's well behind normal pace as far as harvesting goes. The market seems to be adding in some premium as well because of issues with what's going on in the Middle East. Maybe we won't be able to bring out or export as much wheat out of the Middle East because of this conflict, and the U.S. may get some of this export business. So combination of factors in here leading to this rally in the wheat. Of course, it could end just as quick as we've seen it come on in here with weather is starting to improve for that hard red wheat belt. They're going to look like they're going to get some very warm temperatures that will help that crop ripen and allow the harvest to begin, although it's going to be several weeks late. And, of course, we could have an end to the conflict, or we could see that conflict continue for a period of time yet, but that's certainly still up in the air.
Okay, still up in the air. This is not official yet. The announcement from EPA on the RFS, the Renewable Fuel Standard, and the RVOs, volumetric obligations, and again, it still has some rulemaking process to go through here. Soybeans lower on the session Wednesday, soy oil lower as well. But it's important to note that's probably one of the top performing sectors in ag. Soy oil up over 36% year to date. What's going on there?
Yeah, that soy oil really has had a pretty decent start to the year. Of course, we had times last year where it would rally sharply on ideas and rumors that maybe we would actually be turning the corner and get some decision making on the EPA. There's been times where we've been disappointed with what some of the politicians or lawmakers have said about what the proposed amendments are going to be. It was just a little over a week ago where the Trump administration had said they were going to recommend far less of a blend than what the market had anticipated. We sold off, and then the next day we turned around and then started to rally once again because I think that blending mandate was revised to a much, much higher number than what we've seen over the last couple of years. Of course, this still has a long ways to go before it becomes factual, but right now it does look positive that we're going to use a lot more soy oil and the byproducts there in our diesel fuel.
Okay, so I mentioned that coming into the session on Wednesday, soy oil up 36% year to date. There's only one market that we cover on a regular basis in the commodity space that's outperformed that. Which one is it? Well, we'll find out in a moment. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Special guest today is Brian Hoops, President, Midwest Market Solutions. Brian, in our first segment, we were talking really row crops, and we talked about what's propelled the wheat market higher, big double-digit gains on Wednesday across the board. Corn market was higher, cotton lower. By the way, cotton has lost 5.3% of its value year to date. Soybeans were lower, though beans still in positive territory, and soy oil has gained 36%. Now, there are some other commodities that have performed really well. Silver up 27%, gold up 29%, but only one that's outperformed that 36% for soy oil, and it's in the protein sector. By the way, live cattle higher, feeder cattle higher, and with a 37% year-to-date gain coming into the session, the hog market higher again. Are you impressed by what's happening in this protein sector?
Yeah, absolutely. I'm impressed and a little bit surprised by the hogs. You know, we knew they would have tight supplies, a couple percentage below a year ago as far as their supplies go, but didn't imagine that we'd see this much strength going into the summer months. You know, for July and August to be trading 110, 111, I think that's a huge surprise to the industry. It certainly makes the October, December contracts appear way too cheap, that they need to have some sort of a premium built in, because unless the cash markets are really going to fall by the time we get into the fourth quarter of this year. And we knew the cattle market was going to have very tight supplies, tighter than even a year ago levels, and last year was a very bullish year for the cattle market. This year has probably exceeded those expectations. The thing that, you know, we've always had a hard time understanding and trying to pinpoint is how much demand there would be for our beef protein products. And when going into the summer months, the grilling season, we anticipated we'd have strong demand. We get through Father's Day, even until the 4th of July grilling time frame. And after that, maybe demand does start to pull back. And I think that's still a very real possibility. And the thing, of course, we always have to watch is what's happening with our energy sector. We've seen crude oil prices move sharply higher here since the first of the year. I think $20 rally since our lows in April. That is going to add inflationary pressures to our economy. Higher energy prices means higher gas prices. Higher energy prices means it costs more to transport products and food and distribute everything across the country. That's going to lead to less consumer spending as they have less disposable income to spend on products, especially like high-priced beef and steaks.
Yeah, and by the way, live cattle coming into the session on Wednesday with a 15.1% year-to-date gain, 15.3% on feeder cattle. You walked over into that energy sector, and we were higher across the board there. West Texas Intermediate higher, RBOB higher, Nat Gas futures higher. By the way, the Nat Gas market higher now for 4 consecutive closes. Any thoughts in addition to that? What's happening? I mean, I get the crude, and I get that from the turmoil in the Middle East and the uncertainty there, but Nat Gas moving higher 4 sessions. I thought we might be pulling back here in the summer.
You know, that's what usually happens. This is kind of a counter-seasonal type move for that Nat Gas. Usually we don't move higher like this, and we've had a really strong move almost in tandem along with the crude oil. In theory, when you get these higher prices, you will see more production. We'll ramp up production of that gas. We'll ramp up production of energy, crude oil. So I think that production increase is coming and may set us up for much cheaper prices by the fall with this last surge here in energy prices, as you mentioned.
Okay, this is something else that's tied very lightly to it, but there's a new vehicle that will roll out. We'll start selling it. There are pre-orders for this. It is a two-seat vehicle, 3.2-liter V6 engine, and the range on this is 620 miles. Not bad. By the way, it's not an electric vehicle at all. So you're getting 620 miles on this 3.2-liter V6 engine. I'll tell you a little more about it coming up in a moment. First off, if we want to learn more about you, Brian, where do we find that?
Well, you can go to our website, find a list of our offices and some information about all of our brokers at MidwestMarketSolutions.com, or you can give me a call directly, 417-501-5132.
All right. Want to learn more about Brian? That's where you find Brian Hoops, president of Midwest Market Solutions.